Well, we've had a lot of economic data coming out today, as we mentioned, consumer confidence, rising home prices. And joining me now with more on this is Lynn Franco, economist at the Conference Board, a private research group which compiles the Consumer Confidence Report. Lynn, thanks again for joining us.
You're welcome.
So, Lynn, confidence in Americans, slight drop this month. But what are the reasons behind that?
Well, we saw a little bit of a weakening in expectations, but given that we had such back-to-back strong gains, it's no wonder that consumers have taken sort of a temporary pause.
What is the reason for the pause, though?
Well, we saw a little bit of a decline in expectations regarding the economy and jobs, but when you take a look at how they rated current conditions, they say they're much more favorable now than they were last month.
Now, the number 80.3 in July, put that into context with us. I know 90 means a healthy economy, so how much does it take to reach back to that 90 threshold?
It's going to take a little bit more. We've always said this is going to be sort of a long haul, but I have to think, where we were a few years ago when we were in the 20s. So we've come a long way. We've just got a few more baby steps to take.
Now, you mentioned employment, unemployment. That's always a big factor. The jobs report comes out on Friday. What are your expectations for that?
We're seeing expectations somewhere around 180,000. So we think it's going to be enough to at least support confidence and support growth going forward.
Are there any particular sectors that you think are going to see a stronger job resurgence than others?
Well, we're seeing that the private sector is doing pretty good. So as long as we continue to have gains, I think this is going to help to maintain and even boost confidence in the long run.
Well, one thing that's been boosting confidence, I think we can agree, is the recovery in the housing market. And the S&P Case-Shiller Index, which is an index of the 20 largest markets in the U.S., up 12.2% in May. That's year over year. Certainly a big decline, highest level since 2006. What's your reading into the housing market?
Well, we think that, despite the increases in mortgage rates and even in the housing affordability index, that the worst that can happen over the next few months at least would be a little bit of a slowing. But we think that it's not enough to derail the rebound that we're seeing.
People are saying that this kind of growth is not sustainable and that we should be seeing a deceleration in prices for things to look more normal. There's also some talk about concerned fears of a new housing bubble. What's your take on that?
Well, we're not concerned at this point. Again, we think that even though prices have increased, they're still very affordable. They're still below in many markets peaks that we saw back in 2006. So right now, we're not seeing any red flags.
Now, one of the chief economists at the National Association of Realtors says that in order for housing prices to temper down to more sustainable levels, we need to see a 50% increase in home construction.
Well, that's not likely to happen. We do know that, the inventories remain low, and so there is sort of an impetus for building more. But right now, again, we think we're going to continue to see sort of this moderate rebound in housing, that it's not really going to accelerate, given the fact that mortgage rates are picking up and prices as well, both of which tend to deter a little bit of purchasing.
So what's behind the rising mortgage rates?
Well, we've seen now actually it's stepped down a little bit. So obviously, I don't think it's so much the rise in rates that's the concern. It's the affordability. It's the down payment. Consumers are required to put down 20 to 25%. We take a look at our confidence index, and we see that more consumers still are interested in purchasing a home.
Now, very quickly, the Fed has been meeting today. Will come out with a statement on its meeting later tomorrow. Many have actually credited the Fed with stabilizing the housing market. Do you think it has achieved its agenda on that front?
Well, I think we've seen, pretty much a lot of stability now in the housing market. We've seen quite an improvement. We've seen consumers and investors sort of going back in. So I think the positives clearly outweigh any of the negatives.
Okay. Well, thank you as always. For that, we're going to have to leave it there. Lynn Franco, economist at the Conference Board.